Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, April 21st, 2023. So I just finished the premium video for the good folks in the gold room, and it was one of the more dull ones that I can remember. Probably the most dull one I think I've ever sent out in 7 years of being at Simpler. And that's because of this weekly candle, right? So when you have a weekly candle that looks exactly like that, you can basically run it back and just replay the video, at least on YouTube, from last Friday, because I'm going to basically tell you the same thing because absolutely nothing has changed. So let's zoom in here. Let's appreciate the total lack of movement here in the market and the lack of change in the market. And there you are. So that's been your whole week. A little bit above, a little bit below, open and close, basically the exact same spot. And then if you look at the daily chart today, basically more of the same. Open and close, exact same spot. So not really much has changed here. So let's just kind of focus on what we can focus on because I'm not going to talk your ear off about some radical changes that have occurred because I don't see anything that has changed. So let's kind of run it back here and remember that 414 is the 50% retracement of the entire rally, or the entire bear market, I should say, and remains as resistance. Until you get a weekly close above that 414 level, I would expect more of the same. I mean, I have no reason at this point to doubt that the market's just going to continue doing what it's doing until it has a reason to do something else. And in this case, the market doesn't seem to have enough reason to get above 414, but at the same time, it's not falling apart, and it frankly hasn't even come down and tested the 21. So normally this pattern is decent, meaning that you have a very strong level here of resistance. That's your wall of resistance, and your army is marching up to the level, holding higher lows. That's generally good. One thing I don't love is kind of this pattern here. I'm not really a fan of that pattern because these patterns are very easily broken lower. So it looks okay, but I would also acknowledge how vulnerable this structure is on any significant breaks here. So 414 is a level you need to know, first level. Second level you need to know, 429.61. I don't imagine that's going to be relevant for at least some time. So at least just for now, if you just can only remember one level on the SPY, and this is going to be on a weekly closing basis, 414. If you get above that, there's a little bit of room, about 15 bucks to the next level, but you got to get above it first. So then we also looked at a couple of issues elsewhere. So we look at bonds, we look at the dollar, and pretty much everything looks the same, right? Everything kind of has the same vibe to it, where it opened and closed exactly where it was. Nothing really moved. The volatility continues to drain out of the market because there's no movement. So more of the same. But one thing that at least is a cautionary sign, and this wouldn't be a red light, but it's a yellow light with the potential to become red, is the interest rate. So this is the TNX, this is the 10-year interest rate, and basically if you're bullish on stocks, you want to see this go lower, right? Because if this starts to go higher, higher here puts pressure down on tech, which will pressure the entire market, right? So if this hits, that hits, and that hits. So this is pretty important. Now, one thing that we've been talking about is just kind of this low level here, right? And you see kind of this trap candle there that developed. If you look at the top of the range, you see the trap candle up there, basically above resistance, and then it breaks back below resistance here. This should have been support. When it closes below, you see how it goes to the very bottom of the range. And then it gives you the mirror image that occurred at the top, at the bottom. And what do you end up with? Well, drawing your levels. Doesn't really matter how you cut it. Basically, in the middle of the box. So the level that I'm looking at here on the interest rate, and basically you don't really have to look at this too much. I would just leave an alert on your charts, roughly at the very least at 37, but really from anywhere from 36.5 to 37. If you start to get above 36.5 to 37, which is the daily 50 as well as this previous swing high, and you start to get into this zone here, the potential that this is actually going to break out to the upside is substantial after that. It hasn't happened yet, which is why it's only a yellow caution signal, but it is probably the main thing that I'm seeing that could cause some major issues pretty much in everything. So just to finish kind of the thought there, 36.5 to 37 on TNX. If it gets above that, it becomes bearish for the market. If it stays below that, and especially if it's able to then have a close below 35, that would become bullish for the market. So pretty simple stuff, just above this swing high, and then below today's low. Below today's low is bullish, and above 36.5 is bearish. And that would be for tech stocks specifically, but then of course, because they're the biggest stocks on the planet, that would also be for pretty much the indices as well. So that's what I got for you guys. Basically just kind of running it back from next week. Just wanted to kind of cover the main levels on SPY that I'm going to be looking at, and as well as just the one major cautionary signal that I see. Again, it's not a red light in any way, shape, or form, because it actually hasn't done the job yet, right? The job on TNX, the bears need to see this 37 plus. The bulls need to see this 35 minus. And whatever side manages to win this chart, I would expect is going to win the next move in the index. So be aware that next week is megacap tech earnings. You're going to have Microsoft. You're going to have a little bit of Amazon. So that might be a catalyst. But at the same time, be prepared that we might actually stay in a holding pattern where the market as a whole, from a weekly close, open to close basis, doesn't actually move until Fed. That is entirely possible as well. So keep your wits about you. It's a much better market to day trade because you're not getting any continuation on the daily charts, right? It goes up 2, down 2, up 2, down 2. That's great for day trading, not great for swing trading. So just make the adjustments as necessary, and then we'll come back next week and see if we can maybe have a little bit more of a lively conversation around a more lively market than this. All right, guys, thanks for stopping by, checking out the video. Make sure you leave a like, make sure you leave a comment, and we would certainly appreciate that, and the algorithm would also bless you. So thank you much for being here, and I'll see you for the next video. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.